How many times have the stock market seen all-time high? Too many times. Will there be a market correction? Yes. When will it happen? Do I have a crystal ball? Yeah, bought from Daiso, $2 only. Let me bring you to the journey of the stock market corrections, bear markets, and the market outlook for 2021, and how technical analysis can help you with the market outlook. Now, is SPY important? Yes, just like how I helped my prediction and technical analysis of Hang Seng Index, HSI related stocks like Futu, Tiger, Alibaba, and Tencent. The index direction plays a very big part and will sometimes shed some hint on the upcoming movements and directions of most major stocks, the big caps. Very quickly and make it as simple as possible for beginners to understand, I won't be using highly technical terms. First off, corrections. Corrections are market share dropping between 10 to 20%. Bear market refers to overall indexes dropping over 20%. Now we see that over the course of many years, corrections happen around like 28 times, over 10% averaging, 4 months to bottom down and 4 months to recover. Now for bear markets, it's only a handful and average about 14 months to bottom and 2 years to recover. But recent COVID-19 case have shown the whole world that past statistics stands for shit and it's only for reference and lunch break chit chat. Why? It only took 2 months to bottom and less than 6 months to recover, all thanks to technology. The way we react and we receive information is much more than previously. Hi everyone, let me share with you the two major methods I use to predict the movement or the analysis of the market. So I use SPY, which is S&P 500 ETF. I think most of you know it. So I use the good old moving averages. Okay, this is the chart over a year based on daily chart. Now, these are the moving averages. You can see 30. 60, 120, 250, 500 and even 1000. Now for the past year we see a couple of dips. Dips are what I consider less than 10% from the peak. We can see here, like example, this is 352 to 325. This is close to 10%, but it's slightly less, so I consider this as a dip. Over the past year, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If you want to consider this, will be 12. We can see most of it rebounded from MA60s. These will serve as very good reference points. I think more than half of it rebounded at 60. So supposedly you're looking at the S&P 500, and when you realize it reaches the MA60, this will be your first consideration whether to buy, add in your positions or not. There will be a couple of times it rebounded off at MA30s. I would strongly suggest you forget about it because those are just part and parcel of up and downs. There's a couple of times it reaches MA30 but not a lot, and MA30 typically is like less than 3% down, so you can forget about it. So there's only one time over the past year it reaches MA120. Now let's take a look at 3 years. For 3 years we can see here this is COVID. Alright, it went, wow, okay, this is very bad. Okay, this is the 1000 MA. The past 3 years we see 2 times went below 1000 MAs. This is what we call a bear market, I think so. Yeah, this is the COVID, of course. It's a bear market. It's over 20% drop. 20% drop is what you call a bear market, right? Remember, for this it's at 280 and went to 233. Yeah, it's more than 20%. This is year 2018. Yes, there was at year end 2018 there was quite a big correction or bear market, and then it recovered after that. Okay, those two are major events, but most of it, if we expand the look into it, right, most of them as mentioned, okay, the dip will be, the support will be at the MA120 side. Okay, so we can see over here that when it's more stable, a lot of times it bounces off at MA60, MA30, and several times it bounces off at MA120. So all these are very good reference points. Okay, this is 2015, which is another bear market. MA60s, you can see a lot of times it bounces off at MA60 and MA120. Alright, those 2 points will be your first consideration to add in your positions. Now let us take a look at the weekly chart. Okay, for weekly chart, right, we won't use MAs, but instead we'll use exponential moving averages. What we can see here for weekly chart, the candlesticks, right, you'll see most of them will bounce off EMA 10 and 20 followed by 60. So the most of the times it get rebounded off is at the EMA 10. followed by EMA 20s, and then followed by EMA 60s. Alright, a lot of time will be 20 most of the time, and then 60s will be the bigger ones, and then the bear markets will bounce off EMA 120 or even 250. That's for the COVID time. And then this is the 2018. How about 2015? 2015, yes, almost touches the EMA 250. Alright, so this is how I see, but it poses a big problem. This is pretty standard, very accurate due to statistics, okay, but it poses a big problem, which is it doesn't show you what is going to happen next, right? It doesn't show you what's going to happen next, but only after it reaches the certain point, you know that probably it's time for you to buy. Alright, so for that, to predict when does it dip, I use Bollinger Bands. Bollinger Bands, let's take a look at over 10 years. You won't be able to see everything because it seems like the channel is very small. Why? Because its indexes is the average. So naturally, most of the time, it will look like a squeeze. Let us go very exploded view inside. Okay, you realize all the dips. Before the dips happen, right, there will be a slight bulge happening. Okay, and then before you go back to the squeeze. All right, let's take a look at from a couple. Okay, let's take a look at recent one to be more convincing. All right, squeeze here. When it reaches the bulge, it will have a small dip, and you touch the bottom of the band. This is based on daily chart, okay? All right, you can see the bulge is forming up. That's when you have to be careful when it goes back to a squeeze. A bulge forming up and then go back to a squeeze. A bulge forming up and then go back to a squeeze. Bulge forming up, go back to the squeeze. Bulge forming up, go back to the squeeze. Okay, everyone. So other than Bollinger Bands, I take a look at channels. So for channel, it's very simple. Now you take a look at the trend, right? So the S&P trend mostly is going up, going up, going up, and then skyrocketing here. Okay, most of the time. Now we take a look at the 1 year candlesticks, one year chart, daily chart. Okay, we can easily draw two channels here, right? The bottom channel and the upper channel. Okay, we will not draw triple or 3 channels or 4 channels. Make it simple. It's all within these 2 channels. So right now, for the last couple of months, it has been bouncing up down here, right? And then coupled with Bollinger Band, the squeeze is here, right? Then the bulge. So on the squeeze here, the bulge will be coming. So at the end of the bulge, before forming the squeeze, there will usually be a breakdown or breakup. All right. Now for the past couple of months, it has always been breakdown. So I'm not sure if you will break down again. Breakdown meaning you will touch the bottom of the band. All right. So it just probably have a few more couple of trading days before it might turn down again. Of course, it might turn up into the upper band. All right, but for the upper band to turn up, there's a few other things we need to consider. All right, so for now, I cannot say whether it will go up to the upper band or not. But is there a chance for it to touch the bottom band for within the next 10 to 15 candlesticks? Chances are very high. So trade nimbly. Don't pour in everything since we are at like all-time high every day. All right, so that's all I have to share today. If you like what you see, please subscribe. Thank you.